Assalamualaikum. We are from Group 7 of Class BA2621B. In this video, we are going to present the ratio analysis of Spritzer Berhad. Before we start, let me introduce the group members for this assignment. The first member is Suhaila binti Zalani, followed by Dayanku Nur Iriana binti Awang Saiful Nizam, me Ainur Rabah binti Tahir, and lastly Nurul Azihan.
Now, let's move on to the objective of accomplishment for this analysis. These objectives outline the purpose and focus of our evaluation of Spritzer Berhad's financial performance. The first one is to analyze the financial performance and efficiency of Spritzer Berhad from 2021 to 2023. Next is to evaluate the profitability, growth, and return metrics of the company over the 3 years period. And the last one is to identify and address financial stability concern related to liquidity and leverage ratio for sustainable growth.
Assalamualaikum. My name is Nur Azihan binti Muhammad Arifim from class BA2621B. In this presentation, I will explain about the company's background. The company that we choose is Spritzer Berhad. A vision was born in 1989 to supply Malaysians with the purest mineral water imaginable. This idea became Spritzer, the first company bottled water sector in Malaysia. Spritzer has become a leader by establishing high standards in production, distribution, marketing and sales through its dedication to innovation, sustainability and providing delectable hydration solutions. The journey of Spritzer starts with its pure mineral water which comes from a 400-acre rainforest in Taiping, Perak. The organization was founded with the vision to safeguard this precious resource from harm and contaminants and uses innovative concept and equipment. Spritzer not only has mineral water, but they also have their own sparkling water and distilled water. Next, the trend analysis for liquidity ratios. Current ratio is to measure the company's ability to pay short-term debts using all its current assets. In 2021, the company was very strong, which is 3.17, but decreased in 2022 with only 2.12 and 2023 2.03, and the evaluation is decreased. Next is net working capital is to represent the difference between current asset and current liabilities. It dropped significantly from RM 160,793 in 2021 to RM 94,855, but slightly increased in 2023, RM 100 and 2,357, and resulted in volatile. Lastly, quick ratio is similar to current ratio but excludes inventory, focusing on the company's most liquid assets to pay short-term debts. It was strong in 2021, 2.69, but dropped shortly in 2022, 160, and stayed almost the same in 2023, 1.61, and evaluation is volatile.
In my part, I'm going to explain about the efficiency ratio. First, the average collection period decreased from 78.03 days in 2021 to 68.29 days in 2022, indicating an improvement. However, it increased again to 70.43 days in 2023. This fluctuation suggests some volatility in credit policy or collection efficiency. Stabilizing this ratio would help maintain a steady cash flows. Next, the fixed asset turnover ratio increased consistently from 0.08 in 2021 to 0.10 in 2023. This indicates that Spritzer Berhad is utilizing its fixed asset more effectively to support sales growth and operational performance. Finally, the inventory turnover ratio shows a strong improvement, rising from 8.45 times in 2021 to 10.30 times in 2023. This reflects efficient inventory management, reduced holding costs, and increased product demands. It's a positive indicator of the company's operational health. By addressing this issue, it can help Spritzer further enhance its operational efficiency and financial performance. That's all from me.
Now I'm gonna present an analysis of Spritzer leverage ratio for the year 2021 to 2033. These ratios are vital for understanding the company's financial risks and reliance on debt. We analyzed three key ratios: the debt ratio, debt equity ratio, and time interest earned. Let's begin with the debt ratio. This measures the proportion of total debt to total assets. A lower ratio indicates less reliance on debt and reduced financial risk. By using these formulas, for Spritzer, the debt ratio increased from 0.17% in 2021 to 0.23% in 2023. While the ratio is still relatively low, the rising trend suggests a growing reliance on debt, which is not ideal. Next is debt equity ratio. This ratio shows the balance between the debt and equity used to finance operations. A lower ratio is better as it reflects less dependence on debt. Spritzer's ratios increased from 0.21 in 2021 to 0.31 in 2023, indicating a gradual shift towards higher financial leverage. This trend could pose risk if it continues. Finally, the time interest earned ratio. This measures the company's ability to cover its interest expenses with earnings. A higher ratio is better as it indicates a stronger capacity to meet financial obligations. For Spritzer, the time interest earned ratio decreased from 57.70 in 2021 to 40.87 in 2023, while the company can still comfortably cover its interest payments. The declining trend is a concern that requires attention. In conclusion, while Spritzer-Berhard's financial position remains stable, the increasing debt ratio and debt equity ratio alongside the declining time interest ratio suggests the need for closer monitoring. I recommend the company focus on reducing debt and improving earnings to ensure long-term financial stability.
Next is profitability ratio. In this ratio, I'm going to talk about net profit margin, return on asset, and return on equity. The first one is net profit margin. This ratio measures the percentage of profit a company earns from its total revenue, an increasing trend from 7.32% in 2021 to 10.9% in 2023 indicates that the company is improving its efficiency in converting sales into actual profit. Second is return on asset. This ratio shows how effectively a company uses its asset to generate profit. The increase from 4.34% in 2021 to 7.90% in 2023 suggests that the company is utilizing its asset more efficiently to produce higher returns. The last one is return on equity. This ratio reflects the return generated on shareholders' equity, a rise from 5.24% in 2021 to 9.39% in 2023 indicates that the company is providing better returns to its shareholders, showing improved profitability. To summarize, financial ratios are generally divided into four categories: activity, leverage, profitability, and liquidity ratio. These ratios are used to assess different aspects of a business, financial status, performance, and cash flow. The calculation and analysis of this ratio depend on the user of the financial statements. Spritzer companies show strong profitability and efficiency, especially in inventory management and profit margins. However, the declining liquidity ratio from 2021 to 2023 and leverage raised serious concerns. Management must focus on improving liquidity and managing debt to ensure long-term growth and financial stability as the company's debt situation is unfavorable. Properly addressing these issues will help maintain profitability while minimizing financial risks.